In this video, we are going to be talking about the importance of establishing and maintaining a strong banking relationship. The first thing to understand is that when we use the terms banking relationship or bank account, these are widely used general terms. There is a difference between a bank and a credit union, but they both offer very similar products. The primary difference between the two is their ownership structure. A bank is owned by a group of individuals or by a collection of stockholders and is designed around a for-profit model. A bank is a business seeking to make money, just like when you go to Quick Trip or Walmart or McDonald's. Working to make a profit does not make them bad or evil, as long as they are doing it fair and honest. Credit unions, on the other hand, are designed on a non-profit model, meaning they have no singular owner. Rather, a credit union is owned by their members that have accounts there. Obviously, a credit union wants to grow and expand their business just like a bank does. However, instead of the owners receiving part of the profits, the members benefit from the profits by way of better deals on banking services. Maybe the interest rate on your car loan is a little less, or the growth on your savings account is a little more. Credit unions usually have some level of membership criteria that must be met. Maybe it's where you live or the industry you work in. The most common kind of account at any of these financial institutions is a checking account. This is the account most of us use for our daily money transactions, buying groceries, putting gas in our car, paying rent, or getting paid from our job. We use this account many times a day, on average. A savings account is one that is typically used to save up for a larger purchase or to set money aside to cover an unexpected expense. A savings account will earn a small amount of interest on the balance in the account. Most of the time, we are only using a savings account 1 to 2 times a month. Financial institutions will also offer many other accounts and services, such as car or home loans, and other ways besides the savings account to save and invest your money. While many of the products bank and credit unions offer are very similar, they will differ slightly from place to place. As always, be sure you ask lots of questions so you understand what you're signing up for. Read the documents you are asked to sign and pay careful attention to the fees you could be charged with any account or service. You might be asking yourself, why would I want to sign up for something that you issue all these cautions about? I offer you these reminders simply because it is always best to know what you are signing up for when your money is involved. I also tell you this because even with these items to be mindful of, a relationship with a bank or credit union is far better than the alternative. Without a bank account, you are left with much more expensive and far less secure options. You will not have a direct deposit option from your work, and they will most likely issue you a debit card with your paycheck loaded onto it, exposing your money to a greater risk of fraud or simply being lost. If you have a check to cash, you'll need to pay a fee at a service counter or a check cashing service. You might be tempted to take a loan from a payday or title lender, paying much more in fees than you would at a bank or a credit union. Finally, you might be left to carry significant amounts of cash, putting it at risk of being lost or stolen. Overall, maintaining an account at a bank or a credit union is a great step towards improving your financial situation. If you have questions about banking or would like help exploring your banking options, we would love to help you. Reach out to Tech Financial to schedule an appointment.